Hello folks, I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves, what happened today, and what does it tell us about tomorrow? I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here, from the voice and the base of the Rocky Mountains. Another rainstorm today. I've had more afternoon thunderstorms than I can remember. I was mighty young the last time I remember this many, day after day. It's nice, cools everything off, cleans the air. It's a beautiful thing. So, what happened today? Well, markets really couldn't get a lot going. They tried to push higher. They pushed into a higher range to start the day. They were actually up pretty big to start the day and gave it all up for the most part. We had the S&Ps. Let's get over here to the Dow. Let me go get the closing quotes. All right, here we go. So the Dow was up 23 points, up 0.16%, 14,834. S&P's tacked on almost 7, 1639, almost 1639 3/4. The composite 22 3/4, 3612.5. The NDX 17, almost 18 higher, 3091 3/4, and the Russell up 5 1/3, 1016 1/4. It was almost the largest one. So the composite was up the most. The Dow Jones, which has been the laggard since August, still lagging everything else. We had gold up about 15 bucks today. It looks like it's up 50 cents after hours. Bonds were down huge today, down 2 full points, I believe, at the end. Dollar tacked on about 1/3%, and silver was up pretty big, up 3% today. So in commodity land, it was all green, and everything else, it wasn't so green. And when we look at the indexes, they actually tell an interesting story. And so let's walk through this and see if we can make sense of what happened and understand what it means for tomorrow. Because my take here is that these markets are going to try to trade lower, and I'll try to lay out that reasoning for you. So on the S&P, all right, so we had the first thing you notice is volume expansion, right? So you have volume expansion. You're going back into Thursday's high. Now Thursday, not Thursday, but Tuesday's high. Tuesday was the breakdown bar. Just like, remember, we had a breakdown bar up here. We had a breakdown bar here. We came off the top. We gap down. We break down, right? That ends up being an anchor zone because you have a wide price spread, high volume bar comparatively. And in this case, it doesn't end up being a wide price spread, but it is high volume. Doesn't end up being high volume, but it is wide price spread. So we get a wide price spread bar. We go up to test it. Now the top of that bar, 1652.54. Where did we get? 1651.35. We didn't test the top. So that volume expansion as we push up there actually didn't even get the test, so there is no test. So yeah, we got volume expansion, but we're an inside day. It really doesn't mean that much. Now what's interesting, and I don't look at these that often, but I do glance at them, and that is if I go to the ETF did about the same volume, actually did lighter volume, 1.3 versus that Tuesday bar, August 27th, 1.4. If I go to the Dow Jones, the Dow Jones is the same story. Pushes up. The top was 939 1/4. We got to 933 and a third. Has more volume. Inside day. It doesn't matter. And if you go look at the Dow, all these ETFs, they're unanimous right across the board. Every one of them had less volume. Some of them tested the top, some didn't. The Dow did, failed on price and volume. I'm going to flip over and do the rest of them while we're here. The Qs push up. They can't get to the top to test. They had less volume inside day. The IWM also inside day, couldn't get to the top. Actually, it wasn't an inside day. The top was 102.39, got to 102.37, but it had a lower low. But it had less volume as well. So all your ETFs, less volume. Now on the indexes, they all had more volume. We just saw it on the Dow, we saw it on the SPX. If we go over to the stronger ones, the NASDAQ composite, on the composite you see what looks to be equal volume, but it's actually slightly lighter, 16.4, and you did 16.2. Okay, so almost 16.3, slightly lighter. You went over the top into resistance zone, that's this red area. You go into the zone, you fell on price and you fell on volume. That thing wants to come back. NDX. If we look at the NDX does the same thing. It goes over the top, back underneath it, slightly less volume, 16.3, 16.4. It's got the same characteristic, fails on price and volume. And the Russell, as we saw on the IWM, went over the top and under, almost to the top and under on the bottom. Here it's a much different looking chart. In this case, the bottom, it got underneath. So, if any of them are showing you a problem, this one is as well, because it actually didn't get to the top, got to the bottom, tested the bottom, had more volume. So even though first glance those indexes look like they did okay today, folks, they're telling you they want to go lower. And if we go over and look at the sectors, we look at the sectors to try to give us a clue as to what's happening in the market. And if you start looking at these sectors, you're going to see exactly, well, actually you're going to see a different story, but you're going to see the same conclusion. Okay, so let's start with the IYT, which is actually one of the better ones. You had volume pushing up, pushed into resistance. It actually was pushing volume up. That one actually looks okay. So there's nothing to keep this one from trying to go right back up. Now, I've been watching, as you know, I usually look at the SOX, and I'm starting to think I'm going to have to change because the SOX just doesn't do enough volume. I mean, some of these days it's 30,000. You can't read this thing. And if you look at this, you actually pushed up with volume, attacked that high from August 15th. But let's go look at something different, because now we're starting to get enough volume back into the SMH. And the SMH is pushing up, like today was a low volume day, but it's pushing back up into that same date. 3771 was the top. You go over it, you do a lot less volume, 732 versus 2.3. That's a failure on price and volume. That one's going to come back. So I believe the SMH is going to give us better reads going forward, and we'll probably start looking at it. XLB. This guy was one of the stronger ones. It's commodity country, but even it couldn't hold its price. This one's going to drift back in as well. XLE was, remember, the only one trying to do an ABCD up last week. It got back underneath it. Today it went back over the B point and then failed. 8231. Closed at 82.17. You did 8.6 million though, so you might be back. You might be up there testing one more time tomorrow, because you didn't test the top. You did test your B point again. You've closed under your B point, which is another negative. That's 3 bars, but you might get one more test out of it tomorrow. And then we go to the ones that are fairly clear cut. XLF goes now almost. So many of these bars are testing last Tuesday, the August 27th bar. That's where the last breakdown was. That's where you're going to test. And if you think about it, what you're testing in many cases, in some cases it's actually swing point lows you're coming back into, and in many cases it's really anchored support. Here you come back into the August 27th bar. 1976 was the high. You got the 1978. You closed at 1960. You did a lot less volume, 721 versus 426. That's a failure, as clean cut as you can get it. Back the other way more than likely. XLI looks exactly the same. XLI goes up, tests the 27th bar, fails on price, fails on volume. Now the XLK actually was an inside day. Didn't really give us a clue. We'll have to see what that one turns out tomorrow, but it was inside, had more volume. even the ones that gave you volume couldn't give you the right setup to tell you they're going to try to go higher. They all failed. And then we get to the weak guys, the XLP, the XLU. XLP goes back into the 26th bar. That was the bar off the top. That was the big bar on this one. It was one day prior to everybody else. And what happens? You go into it, you got less volume, you fell. Price and volume back under resistance. That one's going back to test the lows, going to go down here and test this low over here from June 24th. Now, if it breaks that, it will be the first one to do it, to break the June lows. So we'll have to see how that one sets up. It potentially is going to set up an ABCD down. The XLU has actually got an ABCD down going, and it accelerated today. It was down all day long, couldn't get anything on the upside. Breaks the swing point low, breaks the B point, big ABCD down. This one measures quite a ways, down to 35.60, I believe. So that's underneath these lows. So if it fulfills, it also will break out the June lows. XLV. Now this is one of the other safety sectors, but it actually has some growth and it's doing better than most, than the other two. Goes into this bar, has about the same volume. I don't see anything here. This one can drift back. This one's hanging. Remember, it was doing a retest regen off here and held the first time. Now we'll see it come back and see if it can hold again. And it may make it down to this next area as a result. If we look at the XLY, this was the leader for a good year and a half now, and along with the XLF, and it broke down off the top, created a lower range. Now it's threatening to break into an even lower range. What did it do today? The big bar on this one was the first breakdown area, August 15th. 15.3 million shares traded over there. 58.10, it closes at 58.09. Underneath it, less volume, test into it, fails. That one's going to come down too. So when I go through the sectors are giving us a much stronger opinion about where this market wants to go, and that is it wants to go down again. The last thing to check, of course, is the OX markets. Let's take a quick look at them. The only ones that really are interesting here are the dollar and the bonds. So let's start with the bonds. Now bonds today, huge jump in interest rates. So remember now, the bonds had came up. They had tested into the retest regenerate. That high of the low bar of the swing point lows, 106.49. They got into it, had less volume on Friday, closed underneath it. They fell into the resistance zone, fell on the retest regenerate. Clean cut. Back the other way. That's how it works, folks. Here it is down here. Volume expanding a bit, but it's not that much. It did close inside the big bar up. But the bonds, they've been in a downtrend now for quite a while. If I scoot over here to the weekly chart, this is a move from 124 to 102. That's 22 points. That's 20% straight away. Okay? These things are going to build out a base. Right? They're going to bounce around as they build it out. And can they go lower? Sure they can. But they're going to try to build out a base. You saw money come into it last week. I guess that was last week, August 23rd. It was the week before. That was the Friday the week before. So August 23rd, that's the bar to test on the downside. It will test the bottom of it more than likely, 102.74. Big move down. I don't know if you've planned bonds. If you are, you got a nice range trade you can play. Now bond yields, when they go up, that's not particularly happy times for the market. The thing is what happens is, just like gasoline, the market gets used to them after a while. Gasoline prices go higher. After a while, the market doesn't care. And if the interest rates stay in this 3.25 range, the market won't care after a while. It will get used to it. Then it will have to make a new range to worry the market. So my guess is that, a test of these lows, a hold down here, it isn't going to make much difference at this particular juncture unless you start breaking lower again. the dollar. Now the dollar has been finding health and wealth as people go to safety, right? And I'll back up for a second out of the technical picture and talk about the general geopolitical and everything. Syria is all over the news, right? Obama comes out Saturday, says that he's gonna have to have congressional approval to go into a limited strike. You know, I never am for, well, I shouldn't say never, but I seldom support military action of any kind, because unless people are directly threatening us, I think we ought to leave them alone. But with respect to this particular situation, is you've painted yourself into a corner. You say you're going to do something, and if you say you're going to do something, if Assad does whatever you've told him, he can't use chemical weapons, and he does, then you got to do something, right? I mean, you just have to do something, because if you don't, you lose total credibility, and credibility is very expensive to get back. So my guess is that they are going to bomb these folks, and they're going to have to, because of what they've said they're going to do, right or wrong. So I would expect that is going to happen. That pressure. Once we saw today, news of Syria back on the table, this market started to sell off and went red. Then it got a little bounce because of the Fed. There was, I didn't see the actual text, but I read that one of the Fed watchers came out and started talking about Fed's not going to taper. You've got 3 or 4 speakers again this week from the Fed going to come out and jawbone. That's going to keep volatility. You got the Fed tapering 2.5, 3 weeks away. You got the Fed head choice still on the table. So there's just so much uncertainty out there. It is difficult at best to see this market move higher. Now on the flip side, you saw economic news, flash PMIs, all across the world better than expected. I don't think anybody expected them to be quite as good as they were. It looks like things are actually better. Now, I'm sure the market is already discounted at some point. It's not as if the market doesn't know these things are coming. The question is what is it going to be 5-6 months from now, right, in terms of economic news? And the market will price that in. So, better economic news, a lot of uncertainty, that's a stalemate. And if that economic news turns the taper talk into something even larger, which has the potential to happen, we're going to see the market even travel lower, and I think you're going to see some of that pressure probably tomorrow. So that's the bigger picture. If I go look at the dollar, that's why the dollar keeps finding buyers. It's the geopolitical worries, safety. 22.30 was that high, got the 22.30, so it tested it. Did 1.2 going into 1.7. It's not enough. It's going to pull back. I would suspect it comes back into the support area, and that's where we'll see what it really wants to do, because that's a gap area and a large wide price spread bar on the way back. Elsewhere, gold, silver, all that stuff, they jumped. I don't really think anything's happening here. So you pull back a little bit, you get a spike back up. Silver spikes up big, ugly candle at the end of the day. The dollar, the gold and silver both to me look like they're just range trading here at the highs. Okay, let me look at some of your questions. I got a few minutes left, and if you have some more questions, type them in. Let me see what we got. Vel, pretty strong day today, moving over 2 swing point highs and getting into a wide price spread bar with some real volume. Well, let's take a look at it and see what she looks like. And then the other one here is GE, so we'll look at that one as well. So GE and Vel. Let's see what they look like. So I'll start with Vel. So Vel's commodity country. Their large iron ore, I believe, is their main one. I guess I'm not certain what their main. Let me see. Yeah, I could pull it up, but I'm not going to. Anyway, I know they're into the natural resources, right? They're a miner, so, but they're not precious metals in particular. Copper, iron ore, whatever, other Industrial metals. Yeah, iron ore. Hey, I got it right. Good memory, huh? Even though I'm getting old, the old ticker still works a little bit. Okay, so what do we do here? We push over. So you say it pushed over 2 swing point highs. I'm not sure where is, am I looking at the right bar? Yeah, I don't see that. Maybe you're talking on a shorter time frame, intraday or something. So intraday, I can pull up a different chart. We can see what that looks like. I'll put it on like 5 days, 15 minutes or so, and see what that looks like. And maybe you're talking about this area that it pushed over. Okay. So anyway, it pushes up, has some decent volume today is the point. Let's see what it looks like here on the weekly and dailies. Okay, so the last time up, you had a nice big push here, right? Wide price spread, high volume. That bar is going to be critical. The top of it is 1562. You traded to 1530. You're coming up. You have decent volume expansion. That's going to be your test, 1562. Let's look on the weekly and see what's there. Okay, so the weekly is really interesting. Okay, notice how this was the breakdown over multiple swing points on the way down. It was certainly a couple swing point lows probably here on the daily, and you had the weekly. So that led to the fast move down. Okay, now you come back up into it, and let's look at our breakdown bar. I had 102, we came back into it 113, so you had decent volume, and you're also popping back into 137. That's the retest regen on the weekly. So that low is 1577. You got into 1589, and if I come back over now 1577, and I come back to my daily, lo and behold, that's just above this. So once again, that is the critical area. Until it can get over this and stay over it, I wouldn't be chasing this thing. I would be buying retraces if I'm doing anything. So you gotta buy. This market is range bound, folks. You gotta buy the retraces. You can't try to buy breakouts, and you don't want to buy momentum. You want to buy retraces, or you want to short retraces. Right? Retraces back up, you short. Retraces down, you buy. And that depends on what the stock is. This one I probably wouldn't be selling it short. I would be trying to buy it as it retraces lower. So that's my take on that. GE. Let's see what GE looks like. So GE, they actually are dogging it. They can't get anything going. They had an announcement on Friday that they were selling off one of their credit card, or not selling off, but spinning off their credit card business, and they couldn't stay up on that. Today, more volume. They closed just over that low, it looks like. Yeah, just barely from Friday. More volume. This one's going to test lower. Let's see what the weekly looks like. Okay, so they've got swing point lows here, and that price point is 22.76. So if I come back over here again, 22.76 is going to be this price. So that's going to be, if they break, it's going to be a break on multiple swing points, multiple time frames, which is going to lead to a fast move lower, which is definitely going to take it back into the top of this bar at least, and that's 22.40. So this area is critical. GE has to hold this area, or it's going to 22.40 at a minimum, and it's trading at 22.23 right now. So that's the way GE set up. If you're in it, you got to set stops, and how you play it depends on what your time frame is. Because longer term, this thing still looks okay. It's not great anymore. It looked pretty good before on this breakout, but it hasn't been able to hold it. You know, and sometimes it just is unable to hold it. But it's gonna, when it comes back into this area, it's gonna have a lot of support from these bars over here and from this one. So it's going to take a lot to break it down. So if you're playing it on an intermediate term time frame, you can stick with it. If you're playing it short term, I wouldn't stay in it after these swing point lows if it breaks. because it's probably going to accelerate for a couple days. DEC, let's see what DEC looks like. I think I still have DEC on here. Somebody asked me about that one before. And before I get through, I want to pop over and look at the gold stocks, see what they look like. So DEC, let's see what DEC looks like. So Deckers Outdoors, they are trying to push up there again. They won't quit, will they? It's amazing. Okay, so they have, so Deckers is interesting. You know, all the charts tell a story, right? And I assume this was earnings here when they made the big drop. You had a warning, you push up new highs, you get the big drop off probably earnings. And now you go all the way back up, you test the highs. So that high was 60, had 1.4. You test it with 1.2, you get to 61, but you close under it. Now you're back up there testing it again, and you got 995. That looks like a failure again to me. So closes at 60. Yeah, it's just in this market, I think the market's going to keep this thing down. And so again, just like we were talking about with Vail, you got to find a place to buy or retrace. And with our TA Today charts, if you have these, you want to look at the support zones. That's where you want to look at. And so the support zone in here is this green bar. It's the bottom of this guy, 57.39. That's the July 25th bar. Comes back in there, it doesn't have any volume, that's the buy again. And you buy it down there, and one of these days it probably tries to break out the top. If you look at it on the weekly, it's going to be multiple swing points over multiple time frames if it does it. So you want to be on board if that happens. All right, let me look at GDX, GDXJ right quick. I want to see what they look like. So these are the gold stocks. Now gold itself stalled at the highs. Let's see what the gold stocks are doing. Okay, so they sold off with volume expansion off those highs, and that was on 27th. So if I look at the GLD on the 27th, let me see what it was doing. So that was the test of that high on the 27th. Let's see, GLD on the 27th was, that was the high. So a little bit of sell-off in gold, big sell-off in gold stocks. So let's go back to the gold stocks again. And they're going to fail, which makes me think that the metals are going to fail. And they're going to pull back. Now, here's a weekly. You can see what kind of damage was done. It takes a while to make these things run. I mean, they've already made a huge run. 22 to 32, right? That's 10 points on 22. That's a 40% move, bottom to top. So you can see what kind of leverage, what kind of leverage move you can get off these things. But you wanna let it drift back in, and it looks to me like it is going to fail. So if you're playing this, let it come back in farther. It'll get down in this deeper zone. That'd be a better buy. The real buy that you'd like is off of this bar, 24.66. We're still trading at 28. That's $4. That's another 10% if it happens. So you can see what kind of moves these things can make. All right, folks. I expect we're going to see some down tomorrow. So buckle up, put your safety boots on, lock your helmet in gear. I'm L.A. Little. This is and was your daily TA wrap. Have yourself a great one. I'll catch you next time. Have a good one, folks. Good night.